All right, welcome to this new weekly outlook. We are currently at the Easter weekend, and tomorrow starts a new week, April 1st. And with the new week, also there's a new month. So we're going to dive deeper into the charts. Before we do that, we're going to look at Forex Factory, and I'm going to give you some framework to frame your month around. Let's start with the framework. If you have a monthly candle and you expect it, for example, to be bullish, your first days or your first week will be accumulation. Accumulation, manipulation, distribution. First few days or first week can be accumulation. Then there will be a move. For example, if you expect a bullish candle, it will be a manipulation move to the downside. It could be in the second week or during NFP in the first week of the month. And after that, it will start a distribution towards the opposing PD array. Same for a bearish candle. First few days could be consolidation, manipulation, distribution. So with this in mind, you see lots of professional traders don't touch the first week of the month. Why? You can expect consolidation or manipulation. Both are not the easiest weeks to trade. Most traders trade in week 2 and 3 of the month. And we're going to look at, with this in mind, we're going to look at the news, but also at how we can frame our trades around for this week and perhaps also a little bit for next week. And if we know our buys for a week, we can go to the lower time frames to frame our lower entry setups around. Now let's take a look at the news. Something that stands out is all the gray folders. Gray folders are the bank holidays. We have one on the Monday, April. Like all of Europe has bank holidays, so European pairs are probably going to consolidate. But we have a USD red folder at 10. So it could be interesting because you can have a consolidating European pair, for example, Euro or GBP, but you can have a strong or weak USD, so the pairs can move on a bank holiday. But as you saw a few seconds ago, expect the first week to not give you the biggest move of the month. That will probably be in the second and the third week. On Tuesday, we have all day Euro, German prelim CPI, and on 10 a.m. again news. Wednesday, we have non-farm employment change, and we have Fed chair poll. And on Thursday and Friday are the biggest folders of the week, unemployment claims, but your big boy, non-farm payroll. NFP protocol is really simple, as ICT teaches. After Wednesday, New York AM, you're not touching the market anymore for the USD pairs. What you can expect is other pairs to move. So for example, if the DXY is consolidating pre-NFP, you can look at the exotics like Canadian or New Zealand dollar or AUD. So with this in mind, let's go back to the chart. Let's start off with a little review of last week. Last week started here with that movement upwards, that this down close candle, it started up and it left fair value gap. So it was really obvious that low of the week will be in this fair value gap. And after that was a clear draw on liquidity. It was the volume imbalance, and you see when price touched the volume imbalance, it rejects it. Now is the question, how would this week look like, and how can we anticipate on a certain move? If you zoom out a little bit, maybe you know what a market maker buy model is, but we are in a clear market maker buy model. That means higher prices are on the cards, and the low-hanging fruit will be closing the volume imbalance and going for this February high. And perhaps we can even go toward this in the coming weeks, but we are talking about this week, low-hanging fruit. This high will be on the cards. And that's the question, okay, you anticipate higher prices. How can we anticipate a move towards those prices? Then we need to look at, do we have a discount array where we can trade off long from? If you look at this price lag, we had that low of the week from last week, but that's already filled, so we can leave it. What we have here is a volume imbalance, but if you look at the other time frames, and the most clear one is the weekly, look at what we just created. I'm going to remove the daily PD arrays. Look at what we just created. We created a big weekly fair value gap. So if you're anticipating higher prices, you think this high will be violated, this high will be traded into, this could be a nice point where you can go to a lower time frame to hunt for longs. So we can anticipate a low of the week from here. What you also can see, this is from internal range liquidity and imbalance to external range liquidity, a high of a low. What you also can see is when price trades on Monday or Tuesday already to this high, What you can see, maybe Monday and Tuesday, when price already trades into this high, then we can frame a trade from external liquidity towards internal liquidity. So we can look for short-term shorts. This is why Monday and Tuesday are really interesting. If we see a move to the weekly value gap, there are clear longs towards the high, and vice versa from external, the high to internal. With this in mind, my money is on trading towards the weekly value gap too long. And this means when DXY goes lower, the USD pairs will trade higher. When DXY trades higher, USD pairs trade lower. With that in mind, let's go to AU. And here's a screenshot of a market maker sell model. You have your original consolidation, accumulation, smart money reversal, and 2 stages of distribution. And if you have this in mind, I'm going to zoom out. Do you see similarities? Help you out a little bit here. Well, what's this? Your green original consolidation. You have your blue area. You have your gray area. And now we just had our first red area. So what comes next? Probably higher prices, and the last green box will probably be somewhere around here. This is where I frame all my trades around. So that's the question. Okay, this is very cool. This will be like in a week's time. What are we going to do this week? When you have that market maker sell model in your head and you anticipating lower DXY for Monday and Tuesday, that means higher AU. Perhaps we can retest this daily for value gap, or we can look for other premium arrays to trade off from. And when DXY goes higher, AU will go lower. And low-hanging fruit for this week will be swing lows. This is swing low. Also this swing low. This will be our targets. All right, let's take a look at EU. EU, exactly the same as AU. What do you see? What do you see? I see an original consolidation. First blue area, smart money reversal. First red area to trade lower. And where to can we trade is the question. We have a swing low right here on the monthly. And long term, we can trade to this swing low and eventually towards this monthly busy, monthly value gap. But we are trading short term for this week. So we're anticipating lower DXY first few days. So that means higher EU. So where are the premium arrays? We have a weekly value gap. The weekly value gap is kind of distant from here. So you also can look at, okay, perhaps we can use this daily value gap to trade off from towards going lower. So this is where I'm looking at, or this premium array, or we're going to get a bigger retracement to here. And the same with AU, what happens if price just tanks to the downside on Monday and Tuesday? So it just tanks, boom, right here. Then we're going to anticipate a move from external raised liquidity, all low, towards internal raised liquidity and imbalance for value gap. This one or this one. So if early in the week we already take this liquidity, I'm going to look for market structure shifts to the upside on lower time frames to where I'm lower around, and vice versa. But my money is just with DXY on lower DXY, so higher euro for the start of the week, and then going lower. From the 3 USD pairs, I think GU is the best one to trade. And that's because we have a clearer drawn liquidity. We have a massive sell-side liquidity pool resting here with a monthly for value gap and also a small weekly for value gap. And we have a clear premium array where we can trade off from the weekly value gap. So I'm going to stop GU for this week most of the time. Here's that monthly for value gap right here. Take out some further swings here. So all the USD pairs could be a nice one to catch, but I'm going to spend the most of my time looking at GU. Also, we have entity USD, kind of similar to GU. We have a weekly for value gap, premium array towards swing low or swing low. From internal raised liquidity, imbalance towards external raised liquidity. That could be this swing low right here or this swing low right here. And again, Luther, repeat myself like a broken record, but it's really important. If price already tanks here, just frame your trades towards the imbalance. Perhaps there's a daily value gap created already from external to internal raised liquidity. This was it for the USD pairs. Let's go take a look at the indices. The indices on the daily are quite horrendous. Like, look at this price action. not very nice. Like we have a volume imbalance right here. We have a value gap right here. And we're just consolidating into this discount array. What I'm anticipating, gone to my head, higher NASDAQ. Because most of all, after accumulation, you need a little expansion to the upside. And also election year, so it's very bullish. So short term, I'm looking at higher prices. How would it look like on the lower time frames? We are inside this daily for value gap, and we are creating some failure swings. Right here, right here, right here, right here. Failure swing is a swing high that doesn't take out liquidity. So there's still buy side resting above all these highs, and also this equal highs. That's why I don't think we are done with the upside. And also, ICT teaches this around the mid weeks of April or the start of May, you will see a local top of the year. Local top, not the top of the year, but a local top. So that means that famous or infamous S&T will happen. One of the indices will fail to make a higher high, and then they tank to the downside. And what's very nice about this, and I think ICT waits for this before continuing his Robinhood Cup again. What the cool thing is, when the sell program on a higher time frame has started, then you will just have your highest probability shorts ever. So you see this in my group, Discord group, I call this a staircase effect. All failure swings, this is your Fenton trend line, all sell side liquidity. Look at the S. Most clear staircase you've ever seen. So this means, the staircase means low resistance liquidity. So what we will see, one of the indices fails to make a higher high, you will see displacement down, leaving a value gap, and then it tanks in a short period of time to the downside. Why? Because of this failure swings, price doesn't have any trouble with getting this liquidity. So it's an exciting time, short-term higher indices, but in a few weeks from now, I'm going to be heavily on the short side. So that's my 2 cents on the indices. Then there is one Canadian pair I want to show you, and that is Euro CAD. And if we take a look at the Euro is quite bullish for the last few weeks. Very bullish. Canadian dollar is quite bearish. That means Euro CAD could be a good long. Then we look, okay, where can we frame our trade around? So we want to trade long. So we need a discount array to trade off from. Well, if you look at how the current discount arrays are respected, with a monthly for value gap that was here tapped in, move with displacement, leaving a for value gap, in a weekly for value gap, tap, moved up, and now we went to this weekly for value gap. And we still have all this equal highs, buy side liquidity resting for us to take. So for this week, I'm going to look, okay, is there possibility on lower time frames to frame longs around? So this will be a play later in the week. I'm going to look at the lower time frame, preferably on the 4 hour, to look, okay, do we respect the premium arrays? Is for value gap, your order blocks, are they disrespected on the 4 hour or maybe on the 50-minute? I'm going to look for longs towards the buy side liquidity pool that's resting above here. Then let's take a look at the GPY pairs. Before we take a look at GPY pair themselves, let's look at the GPY basket. And we are on the higher time frame very bearish on a week, on a monthly, on a weekly as well. We just came out of a beautiful market maker sell model. You remember? Original consolidation, accumulation, smart money reversal, distribution, very quick to the original consolidation. This is your green box. Here you go. So here you can see a market maker sell model in action, original consolidation, blue area, gray area, smart money reversal. The red area is distribution 1, distribution 2, and this is the green area now waiting for a new movement. So this means we can consolidate on GPY, but if we have a higher USD, a higher pound, or higher euro, we can trade longs on these pairs. So I'm anticipating or a lower GPY or a consolidating GPY. So that means we can quite safely frame longs for these three GPY pairs. The first one is USD GPY. USD GPY took so long before it went to these highs. 1, 2, 3 taps, lots of buy side liquidity resting above it. So we are near. We already created a value gap and traded back into it. So I'm not expecting price to come back here. I think early this week, we will get a move towards these highs. And then I'm going to look, okay, can we get a external to internal range liquidity move towards an imbalance? But this means wait out for liquidity to be taken out, wait for the market structure shift to a downside on lower time frames, and then frame your shorts around this. Vice versa, when price early the week goes lower, I see this as a manipulation to get the buy side liquidity up there. GPY also has massive buy side liquidity waiting right here. So also longs are on the car. And if we look at the daily, we are consolidating inside a daily busy with value gap. And I'm anticipating higher prices. So early in the week, I'll look, okay, can we on lower time frames see higher prices towards the buy side liquidity? And Euro GPY, it's almost a copy. GBP, GPY, buy side liquidity inside the monthly for value gap, but I don't think we're done with the upside. So I'm going to also wait for this value gap to hold or not. We are currently at 50% because from encroachment of the value gap to or trade higher or trade lower. But like I said, GPY basket, I think we're consolidating or going lower, and Euro is kind of bullish. So that will be a nice bias towards longs for the buy side liquidity. Thank you for watching this weekly outlook. If you like this kind of videos, please like and subscribe. Happy trading this week. New 2024 mentorship videos will be released as well on Tuesday and Friday. And I will see you in the next one.